You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Let's find out together, shall we? It is time once again for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network. And, the network getting a little bit bigger this week. 17 and a half years, and not just going strong, but growing. Adding a new show yesterday, one that will be very near and dear to the hearts of our TWIFO listeners, because people have been asking me for years, can you spin up a futures show? They love the TWIFO. They want to go straight to the underlying. And, the drum beat just got too loud, listeners, to ignore. So yesterday we launched the Futures Rundown, an inaugural futures show here on the network. And our good buddy Carly Garner edged out my compatriot here today. She said she demanded to be on the inaugural episode because, I get it. That's tombstone level stuff. You put that on your tombstone. I was the inaugural guest on the Futures Rundown show, but hopefully you've had a chance to check it out. If not, listeners, it's available wherever you get this fine program, waiting there for you on the old podcast feed with our friends over there, Plus 500, breaking into the U.S. market and taking on all comers on the futures side. They wanted to really make a name for themselves in Chicago, so they sponsored two things: the Bulls and us. So there you go, listeners. Two iconic Chicago institutions back to back. Check out the Futures Rundown if you are even remotely inclined and you like a little bit of TWIFO. Futures Rundown going to serve you well. We went deep. It was a palooza for a first episode extravaganza. Check out all of that fun as we check out who's joining us on TWIFO this week. He's our old buddy. I haven't chatted with him on this show in quite some time, since early April of this year. None other than the once future and now present Dr. Vix, even though he dabbles in a little bit of Dr. Nat Gas, maybe a little Dr. Crude, and doctor of his namesake, Mr. Russell Rhoads out there moonlighting at the Kelley School of Business. Mr. Rhoads, welcome back to TWIFO, sir.
Thrilled to be here. I'm I'm a little hurt. Just a little bit hurt.
Yeah,
you had Carly on
your nemesis
on
in life.
the first show, and not me.
She called us up.
Because who introduced you to Carly?
She called us up. She said, "I demand to be on the first episode and F that Russell guy." I think those were her exact words, actually. So
yeah,
take it up.
Who
with
introduced you to Carly? That's what
I think she's still a little hot from the debate you two had on our Pro Q&A earlier. She got a little heated there. I think she's still a little salty. Yeah. So she said, "You know what? I demand to be on Futures Rundown and not Russell." And so, you know what? Nice guy that I am, I had to comply. But how are things in Rhoads land, sir?
Things are good in Rhoads land. I'm on campus right now. I'm watching students go from one class to another. It's they finally gave me a window. So I don't feel like I'm like in a little cage all day anymore.
Well, we'll see what we can do to brighten up your day.
All is well down here.
We'll see what we can do to brighten up your day, sir, with a little bit of the movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, a portion of the show where we break down everything lighting it up to the light side and to the dark side this past week over there at CME Group. Again, this goes all the way back to the end of our show last Thursday, so not just this calendar week here, listeners. And this is the most even we've seen it in quite some time. Usually these days we're biased in one direction or the other. Last week, I think we had a hard time even making a bottom five. So sometimes we could be extremely biased. This week, not so much. Roughly 50-50 green versus red. So Mr. Rhoads, that gives you a lot of room to play with. I will, in deference to you not making it on the Futures Rundown inaugural episode, I will allow you free reign to run with the movers and shakers, sir. You can start wherever you like. The floor is yours. Have at it, sir.
Well, I'm going to start with the light side because I've only traded one of the 5 on the light side, and I'll bet you know which one that is.
You love oats. You're all over oats. I know you.
No, it's not oats. It's not the one that is up about 13% on a 2-week basis there. I wish I had been long oats. So starting out, we got and some of these phrases. This is why Carly is better than I am right here. The SRW read, is that the red wheat?
That is soft red wheat. That is
coming across as a great expert here 5 minutes in.
Yes, that's the red wheat. That is Chicago wheat, sir.
That's what I thought. And then we got Chicago wheat and Kansas City wheat. But Chicago wheat up 4.56%. You got to like numbers like that where they go in order. I might start doing my vol guesses like that since somebody else has a pattern to theirs as well. Just a tad ahead, just a tick probably ahead of the Chicago wheat is soybean meal, where they're crushing all that stuff up. And it up 4.6% last week. And then KC wheat, much like our Chicago Bears versus the Kansas City Chiefs. Chicago wheat was up some, but the Kansas City wheat was up a lot more. I don't know if that's a Taylor Swift factor or not, but KC wheat up 4.95%. The market that I have traded, natural gas. The only energy one the only non-ag one that is showing up on the light side here. Natural gas was up 5.8%. I used to be on here a bit more frequently than I am now, but it always seemed like if nat gas was on the light side, then there would be a little note after it that says it was on the dark side last week. And that's what we've got right here. It's number 2 on the light side this week, up 5.8%. Last week, it was number 2 on the dark side, down just 2.55%. But nat gas is a volatile market, and I'm an older man now, and that's why I used to trade it, but don't trade it anymore. And then we gave away the headline, but oats. I don't even know if I've ever even eaten an oat, but oats up almost 7% on a week-over-week basis from the end of the program last week till right now, up 6.98%, following up 6.94% the previous week. Something's going on in the oat market. That's when we need Carly. Carly can tell us the fundamentals behind the oats.
I kind of gave away the spoiler for the number 1 spot, but oats a banger.
That's okay.
A banger. 3 options contracts a week. But now I have a futures show, so I can get into some of the oats action maybe.
That's fantastic.
That's why I did it, so I can talk oats and lumber now.
Okay. But what about what about butter and don't we do dairy still?
Cash settled cheese, baby, lighten it up. We were talking about it yesterday.
That's the one I was trying to think.
That's the one. Cash settled cheese on the rampage, up nearly a full standard deviation just on Monday. Crazy town.
Yeah, that's the kind of stuff that you can be a widow maker or a king maker right there. Those type of markets just got to get on the right side. So lots on the light side was kind of ag heavy there. The dark side is, even though we had nat gas on the light side, we're 4 for 5 on the dark side as far as energy goes. I have traded every single dark side contract. Not this week, but they're things that I've traded more frequently. Number 5. And I may have been one of the very first people to ever trade a Bitcoin future. Back, and it was down 4.66% last week. Back in the day, before I was more independent than I used to be, or now more independent now than I used to be. I was at the exchange that launched the first Bitcoin futures. Doesn't have them anymore. I'm pretty sure I was one of the first people to trade a Bitcoin future that night. So there. Harley can be first guest on the future show. I can be the first person that ever traded.
That's also tombstone
markets.
Level stuff. Traded the first Bitcoin futures contract. There we go.
There are 3 things that I was the first person to ever trade. I'm not even. I'm going to make you guess some other time.
Oats is the other one. I know oats. You're big on oats.
Gold volatility.
Oh, you were the one person who traded it.
I traded gold. The first day it was there, I traded a gold vol future. So there. All right, dark side. We just did Bitcoin at down 4.66%. Everything else is energy related. Heating oil. Apparently we're not very cold right now. Heating oil down 6.59%. Brent down 7.55%. Reformulated gasoline or RBOB or whatever. It's had like 3 names in my career. Looks like it's going to be cheaper for me to be driving back and forth to Indiana because RBOB was down almost 9% last week, 8.96%. And WTI leading the rest of those energy markets lower. WTI was down 9.2%. And that's another funny one. It's pretty common, it seems like, when we have a big week in an energy market, that the previous week we had a big week as well, sometimes in the same direction, sometimes in the opposite direction. And WTI was up slightly last week. It was up 3.68%, which placed it number 4. It's number 1 to the downside. Those top 4 that on the dark side there, those are the types of numbers that you expect to see when we're experiencing an economic slowing. And I think the economy's slowing a little bit faster than everybody thought, and we'll get into rate cuts and all that other kind of stuff shortly. But they're reflecting some of the same things that have been hurting the stock market over the past few days.
Well done, sir, and the movers and shakers. Carly's pretty good at it too. I don't know if I have to compare. Dan Graham's also crushes it, but you're up there. You're up there on the movers and shakers front. You're moving on up, sir, which is good to say. I will now spell you, sir, as I dive on into a little bit of CVOL. Well, actually, I lied. I won't spell you at the top here because let me inquire really quickly. Where do you fall on the CVOL front? Are you a CVOLer? Do you watch these indices a lot? Do you play with them at all?
I pay attention to them, especially when different markets are in play, just to look at what the option market, or what the implied volatility is telling us after we've gotten a big move. Or I'll look at these things as well. I'll look at the Treasury one today, since we've got a pretty significant employment number tomorrow, and that could have an impact on interest rates, to say the least. And the same thing on the metals. Just because we've had so much fun with gold and silver lately, those are things that I like to pay attention to as well. I got to start incorporating them in the things that I write up on the weekends. I gotta deviate from equity vol. Equity vol's not always interesting.
We will pull you to the dark side slowly but surely, listeners, as we dive on into the CVOL movers and shakers for the week. Remember, you can drive this for yourselves, listeners. Just type CME and CVOL into whatever browser you're rocking over there, and that'll get you to this dashboard then make sure you go into the aggregates drop down and then set the high-low range to 1 week so you can see exactly what's gone on over the past week. It is this week in futures options after all. And then go to the ordered list and you will see exactly what we have rocking right now. The top of our list this week, remember it orders it by today's vol activity, so today's vol change. The top of our list this week, we have energy, the energy CVOL coming in at 52.20, up 232 today, so energy vol getting a little bit juicier today. Also looking pretty juicy for the week, pinning the needle to the upside right now. The low was 48.5. That came earlier this week. We got kind of a mixed bag. We got mostly names pinning the needle to the upside with the exception of a handful here, and we'll get to those in a second. Below the energy CVOL, we have the commodities aggregate CVOL. They add them all together, make this basket, and that is the commodities CVOL. That's 33.88 as we're kicking off the show, up nearly a full point today, 0.93, so getting a little bit juicy in the commodities CVOL as well. Another one pinning the needle to the upside for the week right now. The low was 32.43, set, I believe, late last week out there. Then below that, we have the FX vol. Where's Rich Excel when you need him? He loves himself some FX CVOL. 777, a very lucky number this week, up slightly, up 0.06. So we've seen a little bit of fluctuation in FX CVOL over the last few weeks. Not this week, though. Hanging out up 0.06 today. Also hanging out right at about the middle of its range for the week right now. The low was 752. The high was 802. So exactly half a point range. Kind of hanging out almost exactly in the middle there right now. Below that, we have the aggregate ag products CVOL at a 20.59, off exactly 0.01 right now. So pretty much unched on the day, but hanging out at its high for the week right now. The low was 1953, set last week. Then below that, we have the treasury price vol. Again, pretty anemic, 7.36, off 0.05 today. Hanging out pretty close to its high for the week right now. The high was 741. The low was 685. And then below that, we have the metals CVOL, what Russell was just talking about. 1779 right now, off 0.23 today, and hitting its low level for the week right now. The high was 1894. So unlike some of the other names, pinning the needle to the dark side right now for metals vol. So metals vol coming crashing back to earth about 1.2 points below where it was this time a week ago. And at the bottom of our list, the treasury yield volatility, also the largest number on our list every week, 136.87, off 1.01 points just today. This one close to its high for the week, but not quite. The high was 137.88, probably set earlier today, and the low was 128.07, so nearly a 10-point range. Again, treasury yield vol delivering on the vol front. And looking at our movers and shakers this week, listeners, we are dominated by energy. One in the light side at number 2, and then almost the entirety of the dark side is energy. So I think we're going to start there first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, welcome to the wonderful, dare I say it, explosive world of energy. Go to that drop down, cmegroup.com/TWIFO is the place to go to play along with the home game version of the show. Once you're there, go into that drop down. You're going to go down 3 slots to energy. And then from there, like I said, it's an embarrassment of riches. We've got heating oil at number 4 to the dark side, Brent at number 3, RBOB at number 2, WTI number 1 to the dark side this week, off 9.2%, and then nat gas coming in at number 2 to the light side this week, up 5.8%. So an embarrassment of riches across the board. And Mr. Rhoads, since we're hanging out in energy, I know you're a fan of this. I think we'll start here first. What's catching your eye out here in nat gas this week, sir?
Just I'm still trying to get myself to the TWIFOs. So give me a second to play some catch up here. I'm ruining myself as far as keeping up.
You're ruining your
Dan
bits,
Gramsci and Carly now, aren't I?
I'll tell you what. I'll set the table for nat gas. I'll let you sort yourself out, listeners, as we keep on rolling. Nat gas out here, like we said, looking a little bit juicier, a little bit frothier this week, up 5.8% this week, coming on the heels of a little bit of downside last week, off 2.5%. But you know, if you've been listening to the show for a while, 2.5% move in nat gas is quite literally nothing. It's a rounding error. Even 5.8% is kind of sleepy. But that's where we are this week, hanging out at 2.25 in that front future that goes away in about a day right now. It's up about 12 cents this week, so that's about nearly 6% by itself right there. So interesting action out here. And speaking of action, it's a decently action-packed week. Now, remember, we had the Labor Day holiday on Monday. So once you add that in, we probably would have been well north of 600,000 contracts right now. As it is right now on this truncated holiday trading week, 482,000 contracts on the tape. So that is nothing to sneeze at. And unlike your favorite equity listeners, it's not all going up in the contract that expires in one day. No, it's going up in the October contract that expires in exactly 20 days. So we're going to hang out there as well. What is the vol, you might be asking, in October nat gas right now? It's a 63.10, up 1.1 points right now, which kind of is in keeping with what we just saw in the energy CVOL, getting a little bit juicier out there this week as well. And in terms of skew, let's see, what do we have in store for us on the option skew? What are the options telling us right now from a skew perspective? You know, last week, the puts were a little bit juicy, but nothing crazy, 3.5% bid. That's not much, especially when you consider they're starting at a 63 vol baseline. A 3-point premium, 3.5, that's nothing. So they weren't, I wouldn't really call those bid. And the calls were 2.5% offered. Again, same thing. That's kind of nothing. That's kind of a rounding error in nat gas. So I would call that skew mostly flat when it comes to nat gas. And this week, it is slightly flatter, if that's possible. 2.6% bid are the puts this week. The calls, 2.1% offered out there. So apparently the options are pretty content with where we're hanging out right now, listeners, in terms of what they're pricing in from an underlying movement perspective. And let's see what's dominating our tape out here. What's lighting it up out here this week, listeners? If you said 1 3/4 puts, which I believe we were talking about last week with our buddy Dan Gramza as well, that seems to be the strike and indeed the option to beat. And that is the case again this week. 47,000 of the October 1 3/4 puts going up again in a pretty short week. So that's a lot. 28,500 on Tuesday. And again, if you hear me saying Monday at all on the show this week, you know I mean Tuesday. It's probably going to slip in once or twice. That's the danger, the cost of doing business on these truncated holiday weeks. Tuesday, 28,500 opening on Tuesday. Monday, I just did it right there. Wednesday, 7,300, slightly opening there, and about 12,000 so far today against an OI of about 55,000. So it seems like folks are continuing to open on that put strike. 1 3/4 puts, we talked about it. It's a 0.5 point exactly out of the money right now. So that's a decent move in nat gas. As I recall last week, Mr. Gramza was not exactly enthused by those. Maybe he'd like these a little better. The 2 puts coming hot on their heels with 45,000 of those. That's, I think, a more reasonable put strike. 1/4 point, still a decent move, but not outlandish. Also, a psychologically important level. A lot of folks like to line up on those. 45,000 of those going up this week. Doesn't really quite line up like we're seeing some vertical action. And also, it seems like we're opening on all these strikes as well. The big day actually today, 18,100 so far today. That's against an OI of 67,000. 17,000 on Tuesday, also opening, and 10,000 on Wednesday. So you can see it doesn't really line up 1-to-1. And they're opening on everything, so it's not like they're rolling or anything like that. They could be opening verticals, I suppose. But again, the volume doesn't quite line up there, but we could be seeing some opening, straight vertical action opening on both legs as opposed to a roll out there. And let's see. If you want some call action, listeners, you want a little bit of juicy upside, let's see if we can find some for you. How about number 3, a distant number 3, but still number 3, the OCC 2/2. So again, what do you like better, 2 puts or the 2/2? Both exactly equidistant right now in October. Both 20 days to go. Which way you leaning, listeners? 2/2 calls going up 28,000 times, so roughly half of what we're seeing on the put side. So maybe that gives you some indication. The big day is today, 11,400 against an OI of 34,000. About 7,000 yesterday opening there, and about almost 10,000 on Monday opening there as well. So kind of an opening palooza across the board. I guess maybe gun to your head might be a fun flash poll. We did one of these last week, listeners. So producers, listen up. Flash poll, gun to your head. 20 days to go in October. Nat gas trading 2 1/4. Would you rather buy the 2/2 calls or the 2 puts? Gun to your head. Which way you going? Mr. Rhoads, which way are you going on those two? And then B, are your screens up and running now, sir?
The screen's up and running. I had to re-register for a whole new account. So that was fairly impressive. I'd be on the bullish side on that one. Yeah, and it just there's too much going on in the world that maybe just takes a couple of flashpoints to get all the energy markets rocking to the upside. We have started to reflect slower economic growth around the world, and I think a lot of that's already reflected in the energy prices, just based on some of the big drops that we got. Not necessarily all of them, because nat gas was a good market, but I just feel like, I mean, it's already at a relatively low level compared to history. So I feel like, if gun to my head, I gotta pull the trigger right now, I'm buying the 250 calls as opposed to the 2 puts.
I can see that. Certainly a little bit more excitement on the 2.5 calls, right, than the 2 puts. That's like buying a VIX, 11 put. Not exactly the most exciting thing, right? I can see the nat gas put being somewhat analogous to that. Which way are you going, listeners? We'll give you a chance to vote in a second on a little bit of a fun flash poll out there. As we keep on rolling, we talk nat gas. How about a little bit of WTI, Mr. Rhoads? Does that float your boat?
That would be perfect.
All right,
that would
listeners,
be perfect.
Pop out of that drop down. Going to keep it in energy. Going to go to the top of the list, which in the product family, which is crude oil, aka our old pal WTI. We were just talking about the contract specs for WTI yesterday on the Futures Rundown program. $70,000 worth of notional value out there right now. Pretty close, 69,250, because the WTI right now 69 and a quarter, off 4 1/3, or nearly 6%. We had your nemesis Carly on not too long ago. She was saying she was a little bit concerned about some downside potential in WTI, and if it broke, I believe, to around a 65 level, then she was really kind of in a lookout below mode out there. Not quite there yet, listener, 69 and a quarter, but still obviously taking it on the chin. If you go back to the end of our show last week, we're down nearly 10%, 9.25%. So WTI, I think the technical term is getting shellacked. And Mr. Rhoads, so what's catching your eye out there in WTI this week?
Trying to get a handle on the skew here to get an idea as to what they're thinking. And it looks like they're thinking we're going up instead of going down in the near future. The upside implied vol looks like it, on a pretty consistent basis, seems to be higher than the downside, especially when you get out beyond the next couple of weeks into the wintertime contracts. How about we call it that? The December, the January, and the Februarys, especially February. What's going to happen in February that might make prices go up? What's going to make that happen? That's just something that we were definitely going to have to try and keep a close eye on. Is the skew on these things, and trying to get a hint from the skew. Bear with me. I am having all kinds of fun computer problems. There's just no other way to put that one. So I'm having all kinds of fun. I thought universities were supposed to have really good internet connections.
I was going to say, they didn't pay the bill again down there at the university over Indiana. Tell you what, I will lead the horse to water.
You're gonna have to lead me all over the place. What is going on here?
Let's dive in here to a little bit of WTI action out there, listeners. And an impressive amount of action. Again, this is a truncated holiday week. This would be impressive in a regular week with one extra day off the board. This is a lot of paper. 855,000 contracts on the tape right now. Usually we see roughly half that in a normal full trading week. So WTI making up for lost time and then some out there this week. And in terms of action, it's the October contract, this time expiring in 12 days. That is leading the dance out here this week, listeners, with a little over a third, about 34.6% of the paper. So we're going to hang out there. What is the vol in October WTI? You might be asking. 34 and about a quarter. That's up almost 4.5 points. So again, getting back to what we saw in that aggregate energy CVOL, ticking up a little bit today and indeed this week. Still, obviously, a little more than half of what the vol is in nat gas. So not explosive, but juicier than what we're seeing in, let's say, equity land, or even a lot of the other assets we're going to talk about on the show today. Skew-wise, right now, last week the puts were almost 8.5% bid last week. This week, that has come in a bit. They're 5.7% bid. So still bid, but not quite as aggressively. Maybe some folks are still a little bit concerned about some downside here. The calls last week, nearly 6% cheap, 5.8% cheap. This week, that has been cut about in half. That's 2.5% cheap. So still a bid to the puts and a discount to the calls, but that is coming in quite a bit. And as we keep going out a little bit longer, as Mr. Rhoads is right, into, let's say, next year, then we do start to see a little bit more bid out there in some of those names. So intriguing stuff. Let's take a look right now at back to October, what is leading the dance. And actually, you know what? Even though October is doing the most paper, it is not the winner chicken dinner on the volume front this week. It is not taking the pole position on the WTI options front. No, that is all the way out in December, listeners, is the December 60 puts going up 30,500 times this week, taking the top spot. The big day was Tuesday. Actually, I take it back. The big day was yesterday. 13,800 going up yesterday, opening then. 10,500 on Tuesday, also opening. And 6,000 today against an OI of 35,000. These 60 puts, I don't know, listeners, you like those as a buy? You like those as a sale? Let's look at the D skew really quick. The D put skew has come in a little bit. That could be a couple of things. That could be we're rolling down the skew curve. That could be some selling of puts as well, though. Because right behind it, number 2, we have 17,000 only. So that's kind of cut in half. 17,000 of the 65 puts also going up this week. Those are closing, though. So looks like somebody doing the roll. And if the size is any indication, a bit of a house money roll, which means they're sitting on some money, listeners. Rolling from the 65 puts in December down to the 60s. Doing it roughly 2 by 1, 17,000 65 puts going up this week, all closing. 12,000 of that on Tuesday, and then 30,000 and change of the 60 puts. So it seems like they are doing a little bit of that roll action. By the way, the D's future, listeners, 68.18. So again, the 65 puts a little bit juicier, a little bit meatier out there in December than they are in some of those narrow dated contracts. Speaking of narrow dated contracts, we also saw some action on the 70 puts in October this week. They went up 24,000 times. Looks like folks bailing on those as well, which makes sense. We have blown through that strike now. So if you had to put on and you had a hedge, you do have to monetize it at some point. So there could be some of that. Some folks could have overwritten that as well. And now they're a little spooked, getting the heck out of Dodge, even though looking at this skew, the puts skew coming in almost 3 points. So could be a little bit of folks bailing on those long puts, probably, if I had to guess. The big day was Wednesday, 11,000, almost 12,000. And then 10,000 on Tuesday, 2,600 only today against an OI of 19,000, and closing all week long. All right, Mr. Rhoads, sir, have you had a chance to organize your screens? What are you seeing out there in WTI?
Getting myself together here, and it looks like I'd be shocked if the December crude breaks 65. So that just seems to have been the ultimate low end of things for almost a couple of years now. So I'm not a huge fan of stepping up and buying a bunch of the 60 puts unless I have to. You know, like I've got a risk that I've got to hedge, but I wouldn't be buying that as a speculative trade. I'd definitely be going more in the other direction. You just got to assume the macroeconomic is taken over as far as the energy prices go these days. And again, it looks like concerns over maybe the economy is slowing faster than we thought. That's why the Fed's going to have to cut a bit more tomorrow or in a couple of weeks. I say a couple of weeks. Yeah, a couple of weeks. So I think the geopolitical risk is completely out of a lot of the energy prices, which is kind of silly to me. And we're really just reflecting economic slowing, and I feel like we're fully discounting or over discounting economic slowing. So I'd be much more into the upside on crude than the downside.
Interesting. So you'd be a buyer maybe of 75s along those lines, something along those lines.
Yeah, depending on what I'd have to pay for them, the 75 calls would make an awful lot of sense, I think. Where is that from? Well, I don't... looking for prices, and my screen cut off with the 73s.
Always fun. Always challenging.
It's only showing 20 of them. My computer hates me today.
Yeah, the Indiana, not paying the internet bill today out there. Well, while we're looking for other fun names, we hung out in energy for a while. What else is lighting up your tape? Is there anything else in our movers and shakers? A lot of ags. We could go there. We have your beloved Bitcoin, or is there somewhere else you want to visit this week, sir?
Let's lean over to the ags real quick. I know. I think that's. I don't really feel like Bitcoin beyond. There's too much else going on in the world right now.
Not a lot of flow in the Bitcoin options yet, but there is flow in the ags, so we'll head out there next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, as the man said, it is time to get our hands dirty going into the ags. Go into that drop down for asset class, and ags are easy to find. It's an alpha order list after all, so go right to the top of the list for agriculture. In product family, you're going to select grains and oil seeds. And then from there, it's an embarrassment of riches. Number 5 to the light side this week, we have Chicago wheat. Number 4, we have soybean meal. Number 3, KC wheat. And number 1, Mr. Rhoads is beloved oats. He can't get enough of oats, even though he said he's never personally had an oat in his life, which would explain his low fiber constitution. All right, listeners, I think because he was joking about it earlier and because it is number 5 to the light side, let's go kick things off in the ags in Chicago wheat. Haven't talked about wheat in a while here on the show. Again, a truncated holiday week, which accounts for some of this lighter volume. Still decent, though. 94,000 contracts on the tape right now in Chicago wheat. Where is Chicago wheat trading right now? You might be asking. 574 3/4, up 23 1/4, or about 4 1/4% just since Monday. So pretty much all this move, this 4.5% upside that came since the end of our show, it all came this week. So Chicago wheat having a banger week out here, listeners. And of that, this is why I like the ags, listeners. 53.6% going up in the contract that expires in 78 days, the D's contract. So refreshing in an equity world where everything's all 0 day all the time. And even some other products are starting to reflect that as well. The ags still play by their own rules of engagement, and I do appreciate that. Let's see, the vol out there in December, Chicago wheat, 26.91, up 171 this week. So decent little pop out here in the Chicago wheat, but not enough to keep. Well, actually, no, I take it back. The ag products on the week, they were down slightly today, but on the week, they're pretty much up about a full point on the week. So that's probably some of that coming in from the Chicago wheat. And Mr. Rhoads, before I dive into the flow out here, anything lighting up your tape in your favorite, the soft red wheat, aka Chicago wheat?
I was looking at the puts out in December, where we had almost we had a little over 6,200 of the 470 puts trade, and I wonder if that's a put seller, because the skew, the implied vol of the puts is at 4.7 versus 7.4 for the calls. You gotta wonder if the big volume is not to be taken as bearish, I guess is what I'm trying to say.
Are you talking about those sweet 470 puts, sir? Is that what's catching your eye?
Yes, the sweet 470 puts.
In December, listeners, yes, that is our number one offender on the tape out here this week, listeners. A total of 6,200, but almost all of that going up yesterday. 4,600, mostly opening out there, though Mr. Rhoads thinks perhaps not entirely bearish. By the way, what is the skew, you might be wondering, out here in December Chicago wheat here? And looks like the interest is to the upside. Last week, the calls were 7.4% bid. This week, 7.1% bid. The puts last week, 4.7% cheap. This week, 6.3%. So the puts getting a little bit cheaper. So that could line up with Mr. Rhoads. Is that why you're thinking some folks were bailing on those, Mr. Rhoads?
Yeah, I just feel like that's just looking at what the skew looks like right now and seeing the big volume on that, and just it looks to me like we shouldn't take the big put volume as bearish, I guess is what I'm trying to fumble through.
Looks like we got about almost the same number, about 6,000 as well, of the par puts, the 500 puts also going up, also in December, also the same day, Wednesday. So it could be a bit of a roll action from the 500s down to the 470s. Interesting choice if that is the case. And worth noting also the 480s also trading 5,100 times actually. So maybe they sold the par puts and rolled into a 480, 470 put spread opening on both of those. Or maybe a stupid, because that would certainly be stupid. But either way, some funky paper going up on Wednesday. Folks definitely bailing on the pars. What they were doing beyond that, is it a stupid? Is it perhaps a vertical? Tight vertical, 10 handles wide and so far out of the money, nearly 100 handles out of the money. But, you know, we've seen stranger things look at all the crazy upside we talked about in WTI and in gold over the years, listeners. So we've seen stranger things in a 10-point wide, nearly 100 handle out of the money put roll. But nonetheless, that seems to be what's lighting up the tape out here. Let's go a little bit closer to home and a little bit towards the upside instead, listeners. The contract that expires in a whopping 15 days, listeners. It is the par calls on the other side, the 600 calls. Remember, I said we're at about almost a 575 in this contract right now. So 25 handle out of the money calls, going up 4,000 times, 2,400 on Wednesday, slightly opening there, 1,300 on Tuesday, slightly closing. So maybe a little bit of back and forth action on the 600, which again makes some sense. They're not that far out of the money. Could be some back and forth action on those. And only a couple of hundred today. The OI is 4,300. Mr. Rhoads, any thoughts on these par calls, 600 calls going up this week as well, sir?
Like somebody might be thinking we're going to get another bump to the upside in wheat. I do know that wheat had a hard time recently. There was discussion about the climate actually making it impossible to grow wheat in certain parts of the world over the next few years, which whenever I hear that, I want to check back in a few years and see if that's true. But I think that's something that might have gotten wheat going to the upside and since then has backed off a bit. So I could see the 600 call making sense from a speculative or even a hedging standpoint as well.
Let's do a quick run through. We got some more ags. I know there's a lot of ag heads out there. So let's just do a quick foray into soybeans as well. In particular, soybean meal coming in at number 4, up 4.6% this week. We don't talk soybean meal that often on the show. So 63,000 contracts on the tape this week. That's respectable given the fact that it is a truncated holiday week out there. You might be asking to yourself, what is the vol in soybean meal? You don't know that off the top of your head, listeners. Shame on you. Let's see. About half of the paper going up in the Dees contract this week. It has 78 days to go. By the way, December soybean meal at around a 327, up nearly 14 handles or about 4.5% just since Monday. So again, a lot of this ags move coming this week. The vol out there, 23.30, up about 2.5 points. So again, getting a little bit frothier out there in December soybean meal. Skew-wise, not a lot to write home about. The puts last week, 1.3% bid. That's pretty much flat. The calls, 1.2% bid. So a mild bid in both directions. Might as well be flat. This week, getting a little bit more exciting. The puts 3.5% discounted now. The calls 3.3% bid. So slight bias to the upside, but again, slight. And it also makes sense given the fact that we've been on a bit of a tear out here this week. And what is leading the dance, you might be asking out here in soybean meal this week, listener? It looks like it is the par puts, the 300 puts in December, leading the dance with 7,500 contracts. That's a good clip considering only 63,000 total contracts have traded on the week. It looks like folks are getting the heck out of Dodge on these, which is interesting. They were opening slightly on Monday, 1,300, and then looks like bailing the rest of the week. 3,000 yesterday, 3,300 today against the remaining OI of 10,600. Mr. Rhoads, is that your takeaway as well? You think folks are getting the heck out of Dodge on these 300 puts in December, or you think maybe something else is afoot, sir?
Oh, I think taking advantage and getting, I like how you put it, getting the heck out of Dodge and moving on to a new place. So my guesstimate on that, and I'm trying to pull like all the tape as you run through these things, but my guesstimate on that one is moving on to taking the money and moving on to the next place the best that you can.
It's like I get paid to talk or something, sir. We got time for, I think, one more complex, sir. So if you want to break away from the movers and shakers, if something else is catching your eye, maybe your beloved namesake, maybe something else, have at it, sir. The floor is yours. I
was going to say, why don't we take a look at equities? They've just been pretty interesting this week. Right. You know how much I love the Russell complex, but all the equity indexes have been very interesting, have been behaving slightly differently. I'm still waiting for my opportunity in with the Russell finally catching up with the S&P 500. I've been trading in and out of long Russell, short the S&P 500 for some time now. And eventually it hadn't hurt me, but the big move and the big follow through that I've been hoping for Just hasn't happened yet. But I want to go the Russell 2000 since I'm here and I'm wearing a Russell 2000 hat
All right.
now.
I had a feeling you might want to go to your namesake. So listeners, to the world of equities, we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, welcome to the world of equities. You know where to go to find these by now. Go into that same drop down we've been playing with all week long, all show long. Pop out of ags. You're going to go down 3 slots again, this time to equity indexes. And then from there, U.S. index E-mini, and then 3 slots again in the product to Russell 2000. It's been an intriguing week on the equity front, as Mr. Rhoads alluded to out there. We've had naught but green for seems like forever, listeners, and now finally some of that starting to come off, maybe a little bit of a blow off top. Call it what you will, maybe just a turnaround out here. If you're listening to Carly on the show the last few weeks, she's been a little more dour on the prospects for the market out there, which is interesting. But the Russell 2000 taking it on the chin today, off about 0.2%, and of course on the week, getting shellacked off nearly 4% just since Monday. So they are starting to come for some of these equities. It does seem like this week, at least, having a hard time maintaining any real upside out there across any of the major equity indexes. Will that persist? Are the bulls exhausted? Is this just a break before their buying arm is tired? They have to rest it before they can go out and buy again. Either way, listeners, a lot going on. But Mr. Rhoads, as you mentioned, this is your namesake index, and we'd be remiss if we didn't discuss a little equity vol with you on the show, sir. So what's catching your eye out there?
Things about the Russell 2000 is sometimes the call implied volatility will be a bit higher than the put implied vol. We're not seeing that now, but the term structure is pretty freaking flat when you look at the Russell 2000 compared to the S&P 500 or the NASDAQ, where I'm looking at like 5% one month out of the money calls and 5% out of the money 1 month puts. And when you take a look at the Russell complex, there's a couple of points between those. You take a look at the S&P 500 complex, and there's like 5 points between those. And the big thing with the S&P 500 is you're talking about like 5% out of the money at 20%. On the downside, 5% out of the money. The upside is 12%. So you're still seeing. I feel like, and maybe I'm talking my book, but I feel like we're still seeing some decent, bids for out of the money rut calls just in case small caps get going, and we'll see what kind of market reaction we have tomorrow when we get the employment number. I think one of the things that people have been sitting on their hands this week around is waiting for that number, because that number was the big catalyst from the volatility that we got in early August. And it's probably the last big number that everybody will be fixated on between now and the September 8th Fed meeting. So heightened implied vol, but it's also heightened to the upside on RUT compared to the other markets. And I think you can see that some on some of the activity, where there are some calls that show up on the most active, even though with the short data, it's still a lot of puts.
Gotta love RUT, listeners. The entire index has the market cap of about an apple, so you could really see a lot of fun action out there. And you're right, you can see those calls sometimes catch a bid. Not exactly the case this week. Decent paper out there, 33,000 contracts. That's not a ton, but then again, we are talking about a truncated holiday week, and certainly back in the old days, we used to talk about RUT all the time. They had 12,000 contracts in a banger week. So on a short holiday week, putting up 33,000. Nothing to sneeze at out there. The other thing I like about the RUT, listeners, is that it's not your traditional equity. It marches to the beat of its own drummer. I've said that many times. It moves on its own. The calls can catch a bid. You never see that anywhere else. And it's not all 0 day all the time, which is refreshing. Not that I hate 0 day. It's just, it's kind of hard to analyze a ton of paper that goes away in 5 minutes. At least this time we have a chance to sink our teeth into some paper that lasts nearly 15 days, listeners. That's what we have. 21.1% of the paper going up in the SEP contract that goes out in about 15 days. That's where we're hanging out out there. By the way, the Rut coming in to start of this segment, 21.38. So taking it on the chin, nearly 4% this week. What is vol? You might be asking. The SEP contract in the Rut, 25.60, up about 4.60, so up 4.6 points. So getting a little bit frothier out there. And again, compare that to VIX. We expect a premium out there in the Russell 2000. Small caps should be more volatile at the end of the day than the S&P, and they are reflecting that right now. Looking pretty juicy by comparison. Let's see. Skew-wise, the puts last week were pretty hefty, 8.2% bid. This week, that's been cut almost in half, 4.6% bid. So still bid, but coming in a bit. Again, some of that obviously the fact that we're actually blowing through some of these strikes now, listeners. So people are going to be taking those off. So that probably has something to do with a lot of that put juice coming in. In terms of the calls, last week, nobody wanted them. They were near 7% discounted. This week, that's been cut in about a half as well, 3.7% discounted on the calls. So intriguing. The skew in the Rut is always fascinating, much more so than the E-mini. Obviously, the E-mini, you want to look and see how bid the puts are, but that's really the only question to answer out there. The Rut's got all kinds of moving parts, which are kind of fascinating. And speaking of fascinating, if you said to yourself, what is lighting up the tape out here in the Russell 2000 options this week? If you said the 12-day to go, 2,200 puts going up 1,600 times, then you are a winner chicken dinner out here this week, listeners, because that is exactly what is lighting up our tape out here. 2,200 puts. With their, again, these are in the money puts now. They went up all of them on Wednesday, 1,600 at one clip. So interesting. It says slightly opening, but the OI, yeah, it looks like the OI remaining is only 118. So I'm going to go out on a limb and say they probably took off some of these 2,200 puts, and there's 100 odd left, because 1,600 exactly trading, and also the fact that we blew through that strike that we're at, in that future, and that contract, I say we're at a 21.38. So yeah, those are in the money puts. It'd be weird to see someone loading up. I mean, we've seen weirder things, but it'd be weird to see someone loading up on a ton of in the money puts to open. So probably taking those bad boys off. And if you want a little bit of upside action, how about the 2,300s going away in about 15 days, the SEP contract? These did about 1,100 contracts this week. Looks like folks bailing on these as well, which again, makes some sense. 2,300 is a long way to go. With the Rut, we could be there in a day or two. 1,000 contracts of the 2,300s going up this week. The big day was yesterday, about 500 yesterday, 400 on Tuesday, a couple hundred today. The OI on this strike, 1,300. So folks bailing on the 2,300s in the Rut. But you know what, listeners? We're not bailing on you. We'll get to a real quick futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your feedback segment. A lot of fun going on. Mr. Rhoads, you apparently have a fan. Yobi Capital on Twitter, listening to the show right now, says, when the Vol Father speaks, I listen closely. So there you go.
Oh, goodness.
I didn't know your mother was named Yobi Capital. Interesting.
Yeah. So I pay off lots of people everywhere.
Speaking of paying off things, let's pay off some of our fun. We have a flash poll going on right now. Mr. Rhoads, we asked the folks, nat gas trading 2 1/4, OCC 2 half calls, or 2 puts. Gun to your head. You got to buy one. Which way do you think our audience is going? You said you like the 2 half calls. You think our audience agrees?
I would assume everybody in the audience is just listening to me.
100% you say for the 2 half calls. Well, then...
I don't know about that. But
well, you and Yobi Capital might like them, but our audience liking the 2 puts, 53.3%. Yeah. It's a hotly contested issue.
That's what makes a market.
That is literally what makes a market. 46.7% choosing the 2 half calls, going the Russell Rhoads way. We had a similar poll last week in WTI. I think we all know what the winner is now, but last week we asked you a similar question. looking at WTI, it was around a similar range. WTI was at about a 75 or close to it last week. And we asked you again, 20 days to go, we were seeing a lot of activity in the OC 80 calls and the 70 puts. So gun to your head, which way you want to go. And Mr. Rhoads, our audience, unfortunately went the wrong way. 52, again, a very close contest. These markets are all very close. 52.6% ended up taking it with the calls, 47.4% with the puts. We all know who's happier right now. It's the puts, Mr. Rhoads. But yeah, our audience was bullish on WTI last week, and so far they're slightly bearish on nat gas, sir. What do you think?
I'm starting to wonder if I need to fade the audience.
So far, track record, but again, these are tight. Listen, these are tight.
I'm not
tight markets.
The audience, but I'm like, and one of my new lines I've been using lately is you got to look where everybody else is not looking to make money in the markets. So
there you go.
If 100% had said buy those calls, then I should sell them.
Send your hate mail to @RussellRhoads on Twitter. He says he's going to fade you all. You all suck. That's what he's saying out there, listeners. Get in there. That's why you should be following us. If you're listening after the fact on the podcast, these are flash polls. They'll probably be done. That's why you got to be following us live on Twitter, listeners. Just a little fun snippet to see what you folks are thinking. If you agree with us, disagree with us on these various trades. That music means that's going to do it for us on TWIFO today. Also going to do it for us on the network today. But don't worry, if you want more in your lives, I'll be back tomorrow, maybe with the once and future Dr. Vix and other sundry guests to talk a little bit of vol action on vol views tomorrow at noon. And after that, one final time for the week to talk about some crazy, unusual activity over there in options, oddities, land. What's lighting up our tape? What are we trading? Tune into that one to find out. Of course, you can get past the velvet rope. The optionsinsider.com/pro is the place to go to learn about that. And of course, if you missed it yesterday, you missed it on the podcast feed, check out the Futures Rundown. If you like TWIFO, I think you're going to like it. And Mr. Rhoads, if folks like what you were talking about today and they want to get more, where should they go? What should they do?
I talk about everything that I do on Twitter ad nauseum. I'm trying to get better about posting everything that I do on Twitter. So I seem to be on here a lot, so you can always just find me here. So, which I enjoy. Don't take that as a complaint.
There you go. Mr. Rhoads does pop up on Vol Views, and I guess these days trying to elbow back against Carly, also popping up on TWIFO. Maybe you have to elbow your way onto the new show too, just to say nana nana boo boo to her there. So give him a follow in the meantime, listeners. Russell Rhoads, 2 S's, 2 L's, RHOADS. I know it's exhausting. You only have to type it in once, all one word, on Twitter, and you can find all of his nuggets of wisdom. And of course, you know where to go to follow along with all these reports we're talking about throughout the show. CMEgroup.com/TWIFO, TWIFO. That's the place to go to kick the tires and light the fires. We are out of here for today. Check out all that fun I just mentioned, including the new show. I think you're going to like it. Back again tomorrow, and then back again next week. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores.
Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.